Hi there, welcome to Nepi Invests. Even though I have been concentrating on companies that have been operational cash flow positive in their Appendix 4Cs or 5Bs, the company I'll be focusing on in this video, Revesem, are not operational cash flow positive. However, I do like a few aspects in regards to this company. They do have a new CEO, and I am quite impressed with this CEO. She's only been in charge for probably less than or just over 1 month, but she's had a rapid rise in this company over the past 2 years. Also, am quite intrigued about what this company does, and I'll talk about that in the next slide. So I do have a position in this company, a fairly small position, and that small position has increased in value over the past few months. And the main reason it's increased in value is because even though we did see a fair bit of negative sentiment in regards to this company after they IPO'd a few years ago, that negative sentiment has turned around. And it does seem like it's turned around with the appointment of the new CEO. Revesem specializes in the design and manufacture of capital equipment used in the semiconductor device manufacturing process. If someone had to ask me, maybe if I was in a lift or something, what Revesem did, I'll probably just answer they are a semiconductor equipment manufacturer. But they're a little bit more complex than that. So I do recommend going to the website, having a look at the two major pieces of equipment they are selling. Revesem were founded in 2016, and the headquarters are in San Luis Obispo in California, which is halfway, maybe not halfway, but between San Francisco and Los Angeles. If I had to guess, it's probably closer to Los Angeles than San Francisco. So not quite in Silicon Valley, which is just south of San Francisco. The new CEO, just appointed about a month ago from when I'm doing this video, is Rebecca Shooter Dodge. She's had a rapid rise in this company. She joined Revesem in January 2019 as a corporate controller, promoted to CFO in November 2020, and then 9 months later was promoted to CEO. She's also the president and executive director of this company. And it's even more impressive that she's really young. I found it quite surprising when I did see a photo of Rebecca. And I do find that quite exciting because if you do have a young employer being rapidly promoted, she must be doing something good. And I did read a comment from one of the board or one of the directors mentioning how much of an influence she's had in this company already, particularly around the financial aspects of Revesem. The major shareholder of Revesem is First Hand Capital Management. Now, the First Hand Technology Value Fund, which is on NASDAQ, ticker code SVVC there. It's a publicly traded venture capital fund, and Revesem is one of their top 5 holdings. So that's fairly exciting that a venture capital fund has a fairly large stake in this company. And Washington H. Soul Pattinson, which is also publicly traded on the ASX, they have a 3% stake in Revesem. The market cap of this company is $70 million. That's at 66 cents. And that has risen quite dramatically over the past few months. In fact, the share price was significantly lower. I think it was almost in the 20-cent range a few months ago. So it's seen a rapid rise in the share price and the market over the past few months. Seems like ever since Rebecca Shooter Dodge was appointed as the CEO. And the ticker code for Revesem is RVS. Now let's have a look at Revesem's financials. And this is the trailing 12 months, which means it's the last half of the previous financial year and the first half of the current financial year. And just add them together, you get the trailing 12 months financial numbers. Revenue at 13.5 million, operating cash flow negative 2.9 million, and not profitable. In fact, they were loss-making by $1.1 million over the past 12 months. Net cash of $5.1 million, and they do have a price to sales ratio of 6.1. Nothing to get too excited when you look at those financial numbers, and perhaps that's why the market was not that excited about this company until recently. Now let's have a look at the Appendix 4Cs for the June quarter and the September quarter. And for the June quarter, receipts and customers, $3.1 million, and Revesem was operational cash flow negative by about $1 million. And they did start the quarter with $7.3 million and finished with 6.1 because they are operational cash flow negative. We will see this company continue to bleed cash, which increases the probability or possibility of capital raisings in the future unless they become operational cash flow positive. So nothing to get too excited with the June quarter results. Now let's have a look at the September quarter to see if things have improved for Revesem. In some aspects, things have improved for Revesem. Receipts and customers have increased from 3.1 to 4.5 million. However, their product manufacturing and operating costs also increased by a significant amount, increasing from 2.4 to 4 million. Most of the other costs remain stationary or slightly increased or slightly decreased, but because product manufacturing and operating costs increased at a greater rate than receipts to customers, that meant the company was more operational cash flow negative than the previous quarter, and for this quarter it was just over $1 million. And again, because they are operational cash flow negative, the company finished with $4.8 million of cash at the end of the quarter. So I'll just reiterate what I mentioned in the previous slide, that if they continue to be operational cash flow negative, eventually they'll have to do a capital raising or take some loans out to fund their operations. I would prefer them to do a capital raising, but if you had to ask me, the most preferred solution in the future is to become operational cash flow positive. In that way, you can fund all your future growth without doing capital raisings, without taking any loans from any financial institution. As we take a look at the receipts history for Revesem, going back to when they listed on the ASX in late 2018, we don't see what I want to see in this chart. What I want to see is receipts growing consistently through time. Definitely can't say, you can't argue that with this chart here. In fact, the two record quarters were back in 2019, the second and their fifth quarters listed on the ASX. In both of those quarters, the March and December quarters of that year, they had $8.6 and $8.7 million of receipts. And then seems like maybe Revesem was affected by COVID-19 because receipts went from 8.6 million in December quarter 2019 to 2 million the next quarter in the March quarter 2020. And the company has slowly recovered from then. So if we take away the first 5 quarters before or pre-COVID-19 and just look at the last 7 quarters, it does look like receipts are slowly growing through time. I think that's the way you should look at it. And the last quarter, $4.5 million of receipts is the best quarter since the COVID-19 pandemic. As we turn our attention to Revesem's chart, the first one here is the weekly chart, going back to when they listed on the ASX in late 2018. Hopefully you didn't partake in the IPO of this company and then keep your shares, because the share price in the first week they were listed got to a high of about $1.85, 86, and then the share price just fell for about 2 years, all the way to a low of 19 cents, which was reached in November of 2020. The share price has recovered from that low, so it does look like things are turning around for this company just looking at the chart. And a few weeks ago, there was a breakout in Revesem's share price, a nice long candlestick in the weekly chart here. Share price actually increased from 40 cents to 60 cents in 1 week. So that's a 50% increase in the share price on higher volume. So something happened in that week that got the market excited, and the share price has maintained above the share price at the end of that week. Currently, it is right on 66 cents as I'm doing this video just after open on the 20th of October. As we turn our attention to Revesem's daily chart, this is the 2-year daily chart for the company. What I've done with this chart is I've also included a 200-day moving average alongside my usual 50, 20, and 10-day moving averages. And when the breakout happened with Revesem's share price, that's when all 4 moving averages came together. Another reason I included the 200-day moving average in this chart is it does seem like that was the natural resistance level for this company's share price, because back in November last year and then February of this year, both times when the share price reached the 200-day moving average, it did look like on both occasions the share price wanted to break out, but both times it reached that moving average, it fell away, a natural resistance level. And then we saw the moving averages come together, squeeze together a few weeks ago. You can see the share price going sideways for about 2 months, maybe even 3 months. And then all of a sudden, as those moving averages came together, the share price just jumped up on higher volume. That's when the share price increased from 40 cents to 60 cents in 1 week. In fact, the share price high was 87.5 cents. So the share price more than doubled in a few weeks of trading. We have seen a pullback over the last few trading days, and if I do see the share price move towards 50 cents, that would be a good time to buy, a nice safe level to buy some more shares in this company. That's all I have for this September quarter Appendix 4C video for Revison. If you have any questions about this company or any other company on the ASX, please leave your questions or your thoughts, opinions in the comment section of this video. Otherwise, I am not a financial advisor. If you do need to seek financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.